A very good morning from Khandwala Securities Limited and welcome to Wednesday's trading action at Dalal Street, dated June 29, 2022. Well, if last 4 days of gains at Dalal Street are any indication, then it appears a bottom has been found after the brutal sell-off, which had taken Nifty down to 15,183 mark. But this morning, judging by early action at SGX Nifty, it appears pessimists will dismiss the market's recent gains as simply a bear market rally with more pain ahead. Blame the pessimism to rise in bond yields and crude oil prices as central bankers across globe seen juggling to tame inflation without halting economic progress. On the positive side, the news flow on COVID from China could reignite hopes of global growth prospects. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 15,850, buy on dips between 15,650 to 15,700 zone, strict stop at 15,321, targets 15,957 and then at 16,181. Aggressive targets at 16,400 to 16,501 zone. Bank Nifty closing price 33,642. Buy on dips between 33,250 to 33,400 zone. Strict stop at 32,511. Targets 34,250 and then at 34,677. Aggressive targets at 35,793 mark. Alongside market fears, the Indian rupee is at its all-time low of 78.85 against the US dollar on backdrop of strong American currency and persistent foreign fund outflows. IT and software stocks could be bright spots on the side on the backdrop of depreciating Indian rupee. We like Infosys, Mindtree, LTI and Tech Mahindra on the buy side on any early declines. Easing China COVID curbs should boost metal stocks like Hindalco, Nalco and Tata Steel. Traders will brace for the final revision of the US Q1 GDP print to trickle in at 6 p.m. Indian Standard Time. A panel discussion titled Policy Panel at the European Central Bank Forum on Central Banking in Sintra, Portugal will also hog the limelight. Fed Chairman Jerome Powell, ECB President Christine Lagarde, and Bank of England Governor Andrew Bailey will participate in the panel discussion, making it the most awaited event of the week. Meanwhile, the 10-year US Treasury yields higher at 3.22% as traders assess rate hikes, recession risk. In the June month so far, FIs have net sold Rs 56,123 crore worth of shares. WTI oil prices rise to $110.65 a barrel as G7 discusses new Russian sanctions. The Nifty options data for June series suggests Nifty is likely to be in a trading range of 15,000 to 16,500 zone. Maximum call open interest is at 16,000 followed by 16,300 strike price. So 16,000 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 15,000 levels followed by 15,500 levels. Call writing was seen at 16,300 and then at 15,800 strike price, while there was meaningful put writing at 15,800 and then at 15,600 strike price. Technically speaking, the downside risk on Nifty likely only on any close below 15,351 mark. Nifty hurdles seen at psychological 16,000 mark. Biggest interweek hurdles at 16,183 mark. Nifty's 200 DMA at 17,183 mark. We expect Nifty to trade choppy for the day. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Our company or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.